Big changes in the real estate market. If you followed this channel for a while, you've probably seen some of these videos before. I've been making these for maybe about 4 years or so, and there's been some periods where we didn't see a whole lot of change. Not this time. If you're thinking about buying a home along the Oregon coast, you won't want to miss this one. Hey everyone, welcome back to Living on the Oregon Coast. I'm your host, Seth Marchant, licensed real estate broker in Oregon and Washington. Or if you're new to this channel, Living on the Oregon Coast, we show you what it's like to eat, sleep, play, all the pros and cons of living on the Oregon coast. We've got over 200 videos on the channel. A lot of them are introducing you to the areas, showing you neighborhoods, showing you cost of living, pros and cons, kind of all the stuff that you might need to make a decision about buying a home along the Oregon coast. And periodically, we will make a video once about maybe every quarter or so that shows you what the real estate market is like. And we do that because a lot of people that watch this channel are interested in buying a home along the Oregon coast. And if you're one of those people, I invite you to call, text, email, however you want to get in touch. You can hit that QR code. It'll take you to our website. You can find all of our contact information in the description of this video. And of course, if you want to see more videos like this, you can always visit our channel and make sure and subscribe. Now in this video, I'm going to be digging into some local MLS data covering most of the Oregon coast, starting with the north and working our way south. But first, I want to give you kind of a broader picture of what the real estate market looks like. We're going to look at some national data, some data that we don't necessarily have locally that our local MLSs don't track. And the big thing that you can see right now, homes for sale, lowest since 2020. So what we're seeing right now is the market is very slow, month over month, plus 2%, but year over year, just 0.8%. There's 4.6 months of supply. All real estate is local, so it's really going to vary, and there's going to be a lot of different factors. But they say when you get closer to about 6 months of inventory, it leans more towards a buyer's market. Of course, it's been a seller's market for a very long time. And for the first time in a while, we're really seeing a dramatic shift in that there's quite a few more sellers out there than there are buyers. You can see that back in 2020, there were quite a few more buyers than there were sellers. That's when we were seeing multiple offer situations. It was very difficult for buyers to get under contract. They were having to compete with a lot of other buyers, a lot of multiple offer situations, a lot of people paying significantly above list price, whereas now a lot of buyers are starting to gain leverage over the sellers. There aren't near as many buyers out there as there are sellers. So sellers are really having to do a lot to attract buyers. And this is going to be reflected in price reductions. If you're somebody that's been following along online, Realtor.com, Zillow, Redfin, maybe Homes.com, whatever website is that you use to look at home prices, you've probably noticed that a lot of homes are having price reductions. Well, we've seen more price reductions, and according to this graph, in 2025 than we've seen since 2019 and beyond. This is home prices based on zip code. By population, the red is negative, the blue is positive. So you can see Midwest to Northeast, still some positive growth, but a lot of red in the South, Southwest, a lot of red in the West. You can see San Francisco really highlighted there. A lot of people, I'm sure, are watching from San Francisco right now. And, kind of where we're at along the Oregon coast, closer to zero. So, again, it's very balanced right now between being a buyer's and a seller's market. If we go back comparing sales from 23 to 24 and 24 to 2025, we can see back in 2023, we didn't see a whole lot of red. We saw some softer markets in places like Texas and Florida, which saw a lot of migration from 2020, 2021, 2022, just post-lockdowns. Those areas softened quite a bit in 23 and into 2024, but now we're seeing 24 and into 2025, a lot of soft market all throughout the United States. You can still see some growth in the north and northeast. And when we look at home prices year over year, this is national data. Of course, all real estate is local, not a ton of growth nationally, and some markets are going to have some negative home prices year over year. How are interest rates affecting things? Well, this is an interesting graph right here. What this is showing you is what U.S. homeowners say they would accept on their next mortgage. So everybody agrees that 4% or lower, they're good to go. Even 4.5%, the vast majority of people into the 5%. You can kind of see 5.5 to 6% is kind of the tipping point for about half of the population. So where are we at right now? As it stands, late August, 6.52% for a 30-year fixed. We were hovering around 7% for a long time. About a year ago, we got close to 6%. So we're not quite where a lot of people say they want to be. And if we look at mortgage application data for the past year, whenever rates go down, mortgage applications tend to go up. You can see just past September into October of last year, rates went down close to 6, almost touched 6, and you can see that spiked the applications. Where we're at right now, we've seen a slight uptick in mortgage applications with rates getting closer to that 6.5 mark. And with mortgage rates right now at about 6.5, they've kind of been creeping down. That is with the Fed. About a month ago, maybe or so, something like that, the Fed Chairman Powell signaled that there's a high likelihood with the softening job market and inflation being kind of, I think, where they feel comfortable, that there's a pretty good chance that they would cut rates by 25 basis points, which means 0.25%. And so a lot of lenders are pricing that in right now, expecting a rate cut, which is going to be next month at 0.25%. So if we actually don't see the Fed cut rates by 25 basis points next month, expect rates to actually go up slightly. If the Fed does cut rates 25 basis points, they're probably not going to change mortgage rates too much from where they're at right now. And if they surprise us with something more than 25 basis points, it's pretty likely that mortgage rates will go down a little bit further right now, getting close to that 6%. And looking forward into 2025, we expect to see a new Fed chair and the current administration with some of the rhetoric that we're hearing. There's probably a good chance that we'll see rates get cut again. So decent chance in 2025 that we see rates get closer to that 6 or even lower than 6, maybe that 5.5% mark. And the reason why I point that out is because, like I showed you in that previous graph, that's where a lot of around half of the population say that's what they would accept. So we would expect a pretty big uptick if we did get down to 6 again, like we saw a year ago, or even down to 5.5%. And so right now for buyers might really be a sweet spot if you're looking to get a good price on a home, not have to compete with too many other buyers. Let's dig into some of the local data. We're going to start with the northern coastal counties first. So this is Clatsop County, which is places like Astoria, Seaside, Cannon Beach, down into Tillamook County, and then Lincoln County. So that takes us all the way down through Lincoln City and Newport. That's covering a lot of ground, but these markets aren't too much different, especially when you compare to getting down south towards Coos Bay or Brookings. Those markets are quite a bit different than the northern coastal counties. The reason being is because a lot of the northern coastal counties are supplemented by people that live in Portland, Salem, maybe even Eugene. A lot of people buying second homes that live in what's you would consider, or they would consider, the Valley, Portland, Salem, Eugene, Corvallis, places like that. Once you get further down south, like into Curry County where Brookings is, it's a lot more remote. It's not a 2-hour drive to the coast. It's more like a 4-hour drive for people that live in places like Medford. So it's a lot quieter down in those southern Oregon counties. 256 listings, new listings, decreased from 5.7%. And I point that out because I'll contrast that with Brookings, for example. You're going to see the difference between the aggregate numbers of listings that we're talking about here. And what we look at is that graph on the right, 7.4% inventory. That means if no other inventory came to the market, nothing else changed, it would take 7.4 months to sell everything that's on the market. And like I said before, a lot of people say it's kind of an arbitrary number, but somewhere around 6 months of inventory is kind of where the market starts to get balanced. So if you believe that, it's definitely tipped towards a buyer's market in the northern coastal counties. If we look at July of this year compared to June, new listings just slightly up, sales up pretty pretty dramatically at 37% month over month. That's not a huge surprise. There are going to be more sales in the peak season into the summertime. What's more interesting is looking at this past year, so July of 25 compared to July of 2024. And as I'm shooting this, this is August right now, but this is the most recent data that is published. You can see that new listings are down 5.7% and pending sales are down 11%, outpacing the new listings, which is what leads to this buildup of 7.4 months of inventory. So July of 2025, 7.4 months of inventory compared to 5.1 months in 24, 5.2 months in 23. And if we went back to 22, 21, 20, it would be even lower than 5. So the most inventory we've seen in the middle of the summer, kind of around the peak of the season on the northern coastal counties, as we've seen at least in 5, 6, probably like 7 years if you went back. Maybe it could even be more than 7 years. So right now for buyers, it says now is as good of a time as any to buy. Real quick, a few more things on the northern coastal counties. So what do prices look like? Where's the bulk of the sales happening? 25 is the far right side of this graph. So you can see $400,000 to about $600,000, maybe $300,000 to $600,000 is maybe the range. That's where a bulk of the transactions are happening. Real estate does tend to be a little bit more expensive up north. You do have some places like Cannon Beach and Arch Cape, which are some of the most expensive places on the Oregon coast that are going to inflate those numbers a little bit as well. So active residential listings, like we saw in the inventory, way up from the previous 2 years. New listings kind of right around the center of where they were the last couple of years. Pending sales slightly up from a year-over-year perspective in the last 2 years. Closed sales kind of right in the middle of where they were, but average market time is up. This is what's leading to more inventory in the market. It's not necessarily that we're having a lot more new listings. It's just that homes are sitting for longer on the market, which again, for all of you buyers out there, that's going to give leverage for you when negotiating with these sellers. A lot of these sellers are going to be very anxious right now with their homes sitting on the market probably longer than they anticipated. So where does that fall? I actually was a little bit surprised as to see this. The average sold price change just under 2%, right where it was in 2023, but slightly higher than it was in 2024. I would have guessed it would have been a little bit lower. If things continue, I'm going to guess that this is going to continue to go down and get lower than we were in 2024. People are buying a little bit more home than they were, with average square footage being up, and they're getting a little bit more for their dollar. So the average price per square foot down from where it was in 23 and 24. Now let's look at Coos County. If you're looking for some inexpensive real estate, if you want to be on the Oregon coast in a place where real estate isn't as expensive, that's where Coos County is going to be one of your best bets. And by the way, if you want to see any of these charts, any of this data, you can shoot me an email or however you want to get in touch. Again, contact information is below in the description. I'll send you a PDF for any one of these. So inventory in Coos County, and again, new listings 142. That was contrasted with 256 new listings. So that's the data that we're working with. 142 new listings. 4.9 months of inventory, same as where it was last June, but higher than it has been in previous years in 24 and 23. So the market's also going to be a little bit softer, not as much as the northern coastal counties, but a little bit softer in Coos Bay. Month over month, new listings slightly up, pending sales slightly down, closed sales up at 7.9%, but more interesting, year over year, new listings up quite a bit at 13.6%, pending sales up slightly, but closed sales down. So new listings up, sales down. That leads to inventory building up, again, making it closer to, if not more, of a buyer's market. And average price points in Coos Bay, you can see over here, we're looking at 10, 20, 21 transactions, kind of 200 to 400. Average price point in Coos Bay is right around low 300s. Again, contrast that with the northern coastal counties, which is going to be more like kind of like 450, 500, 550. Really depends on the area. You're going to find more variation, but significantly lower real estate prices in Coos County. Active residential listings, again, going to be up from previous years. New listings kind of right where it was last year. Pending sales right where it was. Closed sales right where it was last year. That hasn't changed much. Total market time, though, not quite as low as it was in 2023, but significantly lower than it was in 2024. So a little bit of a different market in Coos County than the northern coastal counties, but the average sold price change. This indicator right here, this is indicating that right now, compared to the previous 2 years, that buyers are, again, having that leverage over sellers, coming in at probably somewhere 3.6, negative 3.7%. And average square foot kind of right in the middle of where it's been for the past few years. And price per square foot slightly higher than it was. So with not a ton of data, it doesn't take as much to skew that. And you're going to see that too as we look into Curry County, which is where Brookings and Gold Beach are. Just 47 listings is what we're working with here. You can see they've had the highest inventory in the past for the entire Oregon coast. So this market is going to be much slower than the rest of the Oregon coast. July of 25, 8.5 months of inventory compared to 6.5 and 5.5 months. So they're having a slow summer as well. New listings way down month over month, at down negative 33%. Again, it's a small sample size that we're working with because there's not a ton of transactions in Curry County. Closed sales down 14%. And again, this time of the year in the peak season, normally you would see these numbers be higher. You would see closed sales be up rather than down. But year over year, that's what really tells the story. What are things looking like compared to last summer? New listings down negative 23%, pending sales down, closed sales down negative 7.5%. It's a soft market along the entire Oregon coast. Where's kind of the bulk of their transactions happening? Well, they've had 11 transactions. That's a quarter of their transactions in the $300,000 to $400,000 range, with 43 total transactions. Again, very, very small sample size. So active residential listings up. So that means inventory's up. Again, new listings are down. Pending sales right where they were. Closed sales kind of right where they were for the last couple of years. Average market time higher than it was in 23, but of course lower than it was. Again, much softer than the market was last year. And then average sold price change. This is a little bit of a surprise, higher than it's been in the last 2 years. So at about negative 4.5%. So buyers are still getting some good deals in Brookings, but there were some good deals to be had in the past for sure. And then average square foot, average price per square foot, kind of right in between where it's been for the past couple of years. So the big takeaway here, for all of you buyers, anybody that's thinking about buying a home along the Oregon coast, now is as good of a time as there has been in at least half a decade. And rates have a lot of effect on the market. There's a lot of pressure for rates to go down from where they are right now. And when rates go down, those mortgage applications go up, bringing more buyers to the market. So hard to imagine a softer 2026 market or a softer 2026 summer than we're seeing right now. So if you're thinking about buying or selling, I invite you to call, text, email, however you want to get in touch. All the contact information in the description of this video. You can hit the QR code. That'll take you to our website. And of course, if you want to see more videos, visit our channel, or you can subscribe. I'm sure if you've watched this video, you start to see a bunch of our videos showing up in your feed on YouTube. And if this video helped, give me a thumbs up. Always lets me know that I'm doing a good job. Feel free to leave a comment in the replies below. Let me know what you think about the market or anything else pertaining to this video. I'll reply back, and until next time, take care, everyone.